Welcome back to a market review. As we can see, Monday, Tuesday, Wednesday, we didn't have any true manipulation below this true week opening price. And what we did Monday, Tuesday, Wednesday, we end up rallying, and then Thursday we end up taking previous day high. We end up showing that we're not comfortable above this high, and we want to reject that. That's seen within this wick, and we end up having a huge sell-off. We have a daily BISI right here. We have a daily buy-side imbalance right here, and we end up manipulating into that during news, taking this pool of liquidity, and we also form an SMT. ES is nowhere near this. ES is a lot stronger, and ES actually throughout the day ended up taking buy-side all the way up here. So ES had a Thursday reversal, and then Friday we just immediately reversed that move and came all the way back up to this high right there. And on NQ, we returned to this down close candle right there. I didn't annotate it on this chart, but that's where we returned. We also have this imbalance that we were priced to, and we also had a nice 15-minute imbalance that we're going to go over. So what's most likely, we just had a Thursday big expansion. We're either going to consolidate for Friday or retrace back into the range. And since we had PPI today and we manipulated price lower, we have probabilities on our side that we might want to displace higher and trade back inside that range. And notice that this, we end up closing right around that hourly fair value gap right there. So here's a 5-minute chart, and this is the market structure at around, this is around PPI. We end up manipulating lower, and ES at the time had actually stayed within a new day opening gap, which I didn't annotate here. But as you see, we wicked all the way back down here, and then look at the body. We're showing underlying strength here, and then we end up coming up, inducing buyers here, retracing, and then boom, off to the races at around market open. So what's most likely after we manipulate a large pool of liquidity within a daily imbalance? I think it's more likely that we're going to expand to buy side. We have equal highs, relative equal highs up here. We have a pool of liquidity up here. We also have equilibrium of that range. And then we also have that 15-minute fair value gap above market price. And here is that 1-minute fractal at 9:30. And as we can see, I didn't annotate here, but we have this volume imbalance. This volume imbalance is holding price. What do we do here? We displace to buy side with this volume imbalance. That tells us that we're underlying bullish because the volume imbalance is holding price. We have this breaker right here. I'm just denoting the bodies, constant encroachment of that, or mean threshold. And notice how this mean threshold is a new day opening gap. There's a very small new day opening gap, but I'm still going to count it. Notice how well we're holding that. And mean threshold of that breaker at market open. Sure, we come up to buy side, but we're just inducing buyers into the market, which is necessary. And notice all these wicks. All these wicks are showing support to that discount array. We also have this inversion that holds. So all of these bullish PD rays are holding. And what do we create here? We create a dealing range from this high to low. After we take buy side, notice what we do. We're consolidating around equilibrium. We get a body closure above equilibrium. We're now more likely going to head to buy side. Then we come back down, find support at that 25% level, have a manipulation fair value gap. Then we immediately displace that, and then we're just off to buy side after that. Notice this manipulation fair value gap. We close above that. We also have this mitigation right here that price is held within. And here is the silver bullet hour. Here we have a silver bullet. This is 10 a.m. to 11 a.m. And what do? We're coming back down to a 5-minute imbalance, also to this down close candle, or actually we don't actually return to that. And then we end up having another manipulation fair value gap where we're displacing it. Fair value gap in, fair value gap out signature. Constant encroachment of this fair value gap holds. Notice ES at the time. ES is consolidating here. We know that we can't go from a consolidation to a reversal, so therefore this is just manipulation lower to then have manipulation higher. And here, normally I would count this as a high resistance signature, and I would not like to see ES or NQ trade back up within that. But since we created a fair value gap above this buy side liquidity pool, I know it's more likely that we're going to displace higher. And notice this 950 macro, we delivered buy side as well. And then the same concept as here, we create a fair value gap above a high. That now becomes support. True support right there. Silver bullet hour. And there's a nice silver bullet trade right here within that. You also have that down close candle supporting price too. All right, and here is the market maker model that I was really, the nice lunch market maker buy model. And as we can see here, we have accumulation around 50% of the implied dealing range from extreme high to extreme low. If you go to NQ, and if you look at from Thursday's high that we made from CPI down to the low that we made during news, this is that 50% mark. What are we doing? We're consolidating around 50% to then have a stop hunt, to then have manipulation leg lower, to then go higher. What are we doing? We're going lower to go higher. That's what we do here. We have this initial consolidation. We barely break above it, and then we start rejecting that. We have a fair value gap, and notice this is happening within that 1150 macro, displacement, market structure shift, 2022 model right there. Boom. And then we end up displacing to a 15-minute order block. That's what this level is right here. We have a 3-minute change in state delivery, which I noted on this chart. This is the 3-minute chart of NQ, accumulation, manipulation, distribution. That's the same chart right here. And then here, we end up having internal sell side rated here. And then we end up changing our state delivery on the 1-minute. Here's that 3-minute change in state delivery. That gets respected. Displacement. And no, this line right here is a new day opening gap. We're displacing above a new day opening gap. And we're coming back down into this propulsion block. Why is this a propulsion? Because we're keying off that 3-minute order block right there. That's a down close candle before the fair value gap. And we're taking sell side liquidity here. Then boom, we're off to the races after that. We end up coming to buy side. New day opening gaps right here. Notice how we get displacement above 50%. We're likely going to head to terminus. Here's that 75% silver bullet reaccumulation. And here's that 25% denoting the lower risk entry. And then look at ES as well. ES is putting on equal highs. And then ES is also drawing into a PD array as well. So this is a nice market maker buy model within that lunch hour. Lunch hour, we get a rate on sell stops, rate on profitable stops. And then we end up changing our state delivery, entering a buy program. And this right here is equilibrium of the other dealing range, I believe. Or no, it's equilibrium of this dealing range. Sorry, I'm tweaking. Equilibrium of this dealing range. Then we end up getting displacement above that. This is equilibrium of the previous dealing range, as I noted. And as we can see, we have accumulation, manipulation, distribution. We know a consolidation cannot reverse. A consolidation will not reverse in price. This is the 1150 macro. We are just consolidating above a higher time frame PD array right here. Here's that 15-minute imbalance, and then we end up flooding to buy side here. And here is the silver bullet hour. I have this in my Twitter. I'm gonna post a link to my Twitter, but I have the standard deviation projections mapped out in my Twitter, or they're also in my Discord, I believe. So my Discord is also gonna be in the description of this video. Here we have silver bullet hour. We end up hitting this higher time PD rate, and then we end up seeing displacement. Here, this wouldn't be logical to take this first fair value gap within the silver bullet hour, but I'm just marking that it ended up working. Here, we have a true market structure shift here. Pull back to this imbalance. I would say that would be a better imbalance to choose, also within that 250 macro. And then look, you have 1, 2, 3 fair value gaps to choose from, even 4 fair value gaps to choose from for that silver bullet setup. Maybe looking for equilibrium of the range. Also, I wanted to note here is that new day opening gap right there. And notice right here, we displaced below new day opening gap. What does that act as? And notice as well, this fair value gap is created right at new day opening gap constant encroachment. I don't think that's random. I do not believe that that's random. And here is the PM session. I know it's a little dirty. There's kind of a lot of stuff, but we have sell side, sell side, sell side mapped out. We displace below this. This is a consolidation we can use deal range projections from. Notice how we have negative 1.1.5, our areas of distribution and redistribution. And we end up having sell side down here, negative 5.5, lining up there. That's a nice projection right there. And this sell side level is also a sell side level, and it's also a 1 hour fair value gap, as I talked about earlier. But look at this implied dealing range from this high just to this low right here. Equilibrium acts as a true resistance of that implied dealing range. We end up having a breakaway gap right here, another imbalance right here, little run up stops right there. Where do we stop? Dead ends tracks at that new day opening gap right there. 5-minute inversion, we redistribute within there, displacement, fair value gap there, and then we head to sell side right there, and the market closes. So overall, this was a very nice study, very nice PM session, sell off after reaching a higher time from PD array. This was that 15-minute imbalance, and ES is also run into all-time highs again. So we have SMT at these highs here, and this also is equilibrium of this imbalance right there. So we have that 15-minute fair value gap. It's equilibrium of that. And here is the daily profile that we had. We had 8:30 reversal from news. We have consolidation overnight, accumulation, manipulation, distribution throughout the rest of the day. And notice how this manipulation is happening below true day open, and then we end up expanding throughout the rest of the session. 11:150, we end up having a reversal back down to 1 hour imbalance made within here, and then also into that those sell side levels. And that's a little schematic that I had driven up. I do want to mark something that I did not place within this review, but I thought it was kind of important. As we can see on ES, I was noting this at the time in the backtesting session. Notice what ES created right here. We end up creating a balanced price range. Look at this. This is perfect delivery. We created a fair value gap in, fair value gap out. These lows are equal right there. I believe they are equal, or they're relatively equal right there. And then we end up displacing the buy side. ES takes buy side. That's the SMT that we put in. Overall, if we look at this, you just have a straight down move to a straight up move. What was this on Thursday? This was just straight manipulation. And now we have this high to this low. I'll talk about that in the weekly outlook, but that was the market review that we had today. Make sure to follow my Twitter if you would like to. I'm going to post chart annotations there, but I'll also be on the YouTube as well.